Hello once again. Today is Tuesday, February 26th. Yesterday was a pretty big down day in the stock market and a pretty big up day for the volatility index, or the VIX. You can see this pretty big change right in there. Let's zoom in. Pretty big day. What does that mean? Well, it means what you want it to mean, but mostly that fear went up because the market went down and people wanted to play more options. They were willing to pay more for their options. But what does it really mean? I hear a lot of people saying that the VIX broke resistance, or the VIX broke a trend line or a moving average. To tell you the truth, I don't think any of that stuff is relevant on the VIX. This thing measures something that you don't actually trade, even though there are instruments that are supposed to mimic the VIX. This measures something completely different, and for me, it's just a measure of how extreme things are. So right down in here, extremely low, multi-year low, and here we go. You break this supposed support. You break this supposed support, and theoretically, it's supposed to keep going down, and it didn't, as you can see. So it's like saying yields are going to go past zero, below zero. It just doesn't happen. So here we are. What does it mean? Just want to see that we have this big run up here, and I like to look at stochastics, and you can see that when it gets to these overbought levels, the VIX tends to stop going up. All right, you can see all this, and the higher it goes up, the supposedly more fear in the market there is, and the bigger bottom that we're supposed to get for the price of stocks. So let's try to put those two things together. We're going to look back in time at other big run-ups to see if we see the makings of one right here. Well, here you have the VIX overbought. Let's put a little thingy here. Probably not the right line to see use because it's kind of faint. But you can see that it kept going way higher after this thing got overbought. So how do you know? The thing is, you don't. These kind of things work and tell you what was, but I don't think they tell you what will be. Here we have an overbought VIX. Stochastics. Hope I haven't been saying VIX the whole time. Overbought stochastics, and it did correct, and then it went way higher into this big March bottom for stocks 2 years ago. So if you go back in time, there's not a whole lot of stuff you can read out of trends and patterns in the VIX, other than it was really low here, giving you high risk for stocks. Here we have a small bottom in stocks. Here was a bigger bottom in stocks May of last year. You might recall a big sell-off. And there is a very big bottom in 2011. But these are looking back, and you could say as the VIX got up into this area, stocks are likely to be making a bigger bottom. And as it gets up into this area and then pulls back, you can say, well, it's kind of a minor bottom or a smaller bottom in the stock price. So bringing it back to today to wind it up, if this is a bottom, it's a very small bottom. But we really have no way of knowing where it's going to go from here, whether it's going to spike up to some major sell-off, whether you believe Italy is the problem or whatever. But I just take VIX with a grain of salt and just wait for it to get to some sort of extreme. There you have it. Thanks for tuning in, and we'll see you next time.